Welcome back. Amid political turmoil in Ottawa and, of course, the threat of big U.S. tariffs on Canadian products headed to the United States, Deloitte Canada has just published its 2025 economic outlook for this country. We're joined now by Dawn Desjardins. She's chief economist at Deloitte Canada. Thank you very much, Dawn, for joining us.
Oh, my pleasure.
How much does the tariff threat figure into Deloitte's economic outlook?
Well, our baseline, we've called the report Calm Before the Storm, so that should give you some indication. But our baseline doesn't assume tariffs. We do think that there's some positives for the economy. The good news being interest rates are coming down, inflation relatively steady and relatively low. And the fact that households have a lot of savings, that's going to insulate them a bit against this increase in costs they're going to be facing. So that's the good news. The not so good, or perhaps even bad news, is that under a situation where we have such significant uncertainty, both domestically and externally, businesses, which we were previously thinking would be in position to start investing, we think they're going to be a lot less likely to do that in the immediate term. And so that does weigh on the economy. And so we've got the good, the somewhat bad, and of course we are seeing immigration come down significantly, so another sort of bad factor from an economic point of view. And then we got the ugly, and that certainly is the threat that we will see tariffs on our exports to the United States. And so we put in a scenario whereby we say, okay, what if we do get 25% tariffs? What does that look like for Canada's economy? Their growth goes from 2% to just over 1%. And what if the Canadian...
So that would not drive the economy into a recession in and of its own, is that correct?
That's correct. Not if we don't retaliate. Mm-hmm. However, the real ugly is if we do retaliate. And there we see an actual contraction in GDP this year of 0.8%. So that's a huge swing. Mm-hmm. So on balance, we've maintained a baseline that says we've got some good things going on here, some things that will allow the economy to grow, but probably not as strongly as we previously expected, and there is a significant downside risk.
What is your sense on how much the tariff threats may be weighing on the investment decisions of Canadian businesses? Do you have a sense of that?
Well, we have a CFO survey that we conducted, and this was in the third quarter, so before the election of the new administration in the States, before any kind of uncertainty about our own government, and there, 93% of the CFOs we talked to said then that wasn't a good time to take on risks. So that's before we've had these recent developments. So we certainly have a sense that businesses are really struggling to figure out where to invest, how much to invest, and when to invest.
What about political uncertainty in this country? Does Deloitte factor into its forecast the likelihood of a Canadian election this year, the certainty of a Canadian election sometime during calendar 2025, and certainly the possibility of a change in government? Well,
I mean, we always are looking sort of not at the politics, but at the policy.
Correct.
And so from that perspective, it's really hard to layer into a forecast at this stage what that policy backdrop will look like. So we have that as sort of the uncertainty element in terms of the forecast, and again, showing up on the business investment side of the equation, not so much anything direct in terms of policies until we know the lay of the land.
Do you have a forecast on the price of oil, which can be is obviously a key input into Canadian economic performance?
We don't have a lot of movement, to be honest, in the price of oil embedded in this forecast. So, WTI hanging around between $70 and $75. Mm-hmm.
What about immigration levels, which are crucial to gross domestic product performance, certainly in the aggregate? We know the backdrop there that it's been a big story in economic growth for many years now, and the Liberal government now dialing back immigration targets.
We do have an impact on the consumer side. So the consumer, we're getting a bit of a lift. We think early this year, the GST reprieve, as well as checks that are coming out in Ontario, we're giving some support to the consumer. But as we go through the course of this year, we do expect to see the weight from lower population growth filter into the consumer side, so tempering somewhat. But again, offsetting that, lower rates, more stable inflation. We think that's going to be a positive from the consumer side. But again, we have to take into account that, yes, we are going to see slower population growth. And as we know, population growth was a really strong support for our economy over the past couple of years.
So let's circle back to something we talked about near the top of the conversation. The big question that a lot of viewers will be wondering is the Canadian economy headed to recession? Your view is the tariff situation could push us there if Canada retaliates in a big way with tariffs of its own, correct?
That's exactly it. So we moved from a 2% growth rate forecast to a minus 0.8. So big swing. If, in fact, we do see these tariffs come into effect and we retaliate strongly.
Dawn, thank you.